Hard to believe there are only 2 months left in 2012 and we're looking at a new year ahead. We are getting some data now suggesting a few early indications on how 2013 might shape up. One of the most credible sources comes in the form of earnings releases from companies. For perspective on what we can expect in the months ahead, we turn to U.S. Bank business investment analyst Jim Russell for our U.S. Bank Economic 360. Jim, good to see you.
Good morning, sir.
What are the quarterly earnings telling us, and what can we expect for the rest of this year into the first part of next?
As your introduction indicates, Brian, there are some data that we are looking at that does indicate a little predictively what the rest of the year looks like and into 2013. What you see here is a graphic that really illustrates the year-over-year percentage increase or decrease, as the case may be, in earnings that are reported by the S&P 500. Really what we're seeing now is a dramatic deceleration in earnings growth by companies in the United States. Why is that important? It's important because this is all around jobs. Companies in the United States are creating all of the jobs. None of the public sector is really creating any jobs. All of the job creation is coming from the private sector. If we have a private and profitable private sector that's profitable and growthy, we will create more jobs, and I think that's what people are concerned about. So we're very hopeful that, frankly, earnings actually start to bounce up, and we'll talk about that in just a second.
Hurricane Sandy threw a major curveball at the financial center, New York City and the Jersey Shore there. What impact is that having, and what impact is it expected to have?
We do have some early figures on that. Absolutely, these figures will be revised, and in our opinion, they will be revised a little bit higher. Looks like to me it's about a $50 billion hurricane, meaning that $30 billion of property damage, which of course is destructive now, but we will rebuild in the first quarter of 2013. So we have a little bit of a hit to the economy now, a little bit of a rebound in 2013, probably about a half percentage point of GDP, and we have about $20 billion of business disruption. So call it added up, $30 billion of property damage, $20 billion of business disruption, $50 billion. Just to put that in context, Katrina was $146 billion. So as large as those numbers are, we have seen worse in the past.
All right, I don't know if you realize this, but Jim can peer into the future. So we're going to put a challenge out here. A year from now, we're going to look at this interview and see how correct you were. What are we likely to be talking about in a year? What will the headlines be this time, 2013?
In November 2013, we think the following things will be operative. We'll still be talking about Europe, unfortunately, as being in a recession. We do not see anything near term that really takes that and puts it back together again. So that will be a headwind to the global economy. Two things that are more positive, though. We do think that China will perhaps start to be hooking up by that time. Probably begins about mid-year of 2013 and certainly in place by November of 2013. And here at home, I think that there is a reasonable case, in fact, probably stronger than reasonable, that we'll be talking about the following things: a lower unemployment rate, stronger growth that moves from 2% to 3% by year end of next year, continued low interest rates, a consumer that's healthy, a housing market that's healthy, and strong consumer demand on the retail side. So I think that even though the next quarter or two will feel like what we feel now, we do think that the path forward is a bit brighter, and so some things to look forward to here at home.
We'll revisit this in a year. I hope you're right.
I hope so too.
Jim, we appreciate you and U.S. Bank. Thank you.